weekly market view from Capital Spreads. I'm here this week with Nick from our dealing desk. So this week we've seen obviously quite a big central bank focus. Yesterday we saw the ECB come out unchanged with their rate decision and also unchanged in terms of asset purchases. What did you take from sort of Draghi's press conference after the decisions?
Well, obviously with both the ECB, or the Bank of England and the European banking decisions yesterday, both leaving them unchanged. Bank of England particularly disappointing in the fact that despite the mandate from the Treasury to allow them to push their inflationary bands above the 2%, they seem to be sitting on their hands until Carney arrives in July time. No expansion to the quantitative easing limits of 375 billion. Markets disappointed that to start with. The pound recovered a little bit on the back of it, but the equity markets, indices markets came off a bit. Followed by, as you said, the ECB leaving it unchanged. Draghi, he was downbeat. It wasn't so much that he had any real bad news. He was talking about he was going to keep a loose monetary policy for the foreseeable future to keep the growth going. But he seemed to be down. He was focusing on downside risk over the year of 2013. He did say Cyprus was a one-off, but it struck me as it didn't strike a good chord with the markets. Having managed a reasonably healthy rally after the long weekend of the Easter long weekend, which I think was on the back of relief that there was no further problems out of Cyprus, and then a little bit of micro news on the back of the Vodafone licenses. Really, the switch all turned to macro and the focus on the downside.
Yeah, we also saw Bank of Japan come out yesterday for the ECB news, and that they're going to be taking on substantial quantitative easing in order to reach their 2% inflation target in the next couple of years. We saw quite a big effect on the yen yesterday. How do we see it affect sort of European and the US stock markets?
Yeah, I mean it's an interesting case, isn't it? Because they are going for it. They're desperately trying to get growth into their economy, having sat flat for so long. I think they've carried on with their successful policy of trying to weaken the yen to gain some. We had a good move that way yesterday. It was corrected a little bit this morning, but you'd expect that on a move the size of the morning before. But there's almost sort of two sides of it going. So we're being quite cautious over here whilst he is trying to, as you said, pushing the boundaries, desperate to get his growth and his inflation figures back up.
And later on today we've got US non-farm payroll numbers. Any predictions there?
Well, it's been a funny week. I mean, the whole week has felt a bit like waiting for news. What I find quite interesting is, for the first time, the negative sentiment seems to be getting some traction. We've had obviously down days. We've had bad. We've had reversals within the last, but we haven't. I don't think we've had in the FTSE, for example. I think we've had 3 down days this year yet, and we are online for the 3rd down day today. Now we're lower going into the non-farm payroll, but it's always interesting to see the reaction of the markets to the news. So as much as where the markets knee-jerk react as the news comes out, it's interesting to see how it reacts to it. Where the market really wants to go is quite often the clue in the detail. So it will come out as a bad figure. The market goes down, pulls straight back up. It was just a good opportunity to buy, and the clue is of the real sentiment in those markets are quite often in the half hour or so after the figure comes out. And I think that'll be key today because for the first time for a long, every time we come up with some bad news, and there has been a lot of potentially damaging news around, I think, in the markets this year. 2 days later, we've shaken it off. Central banks are back in control, and the markets are rallying again. First time, for a little while. I think that we're 3 days into this down move, and we haven't had that consistency. I know that 3 days doesn't sound like many, but it's the first time we've had a 3. If we end up closing down later today and then closing down a week, it's the first time we've done so this year.
And what sort of things have you seen your clients doing this week?
Well, again, I think that's been a bit of a mixed picture. Whereas yes, there was some good selling into the rally on Tuesday. So I think they've had a good week. They've called the top reasonably well, but it's a bit of confusion around here. Our book is fairly flat at the moment. Clients aren't quite sure. They've had a good week. They've taken some money off the table, and they're seeing a little bit on the sidelines. And I think that's probably a little bit true across the markets. They all seem to be in a little bit of flux. I mean, I think on the foreign exchange markets, yes, the yen has had a move, but the euro is sitting in sort of mid-term levels. And although we are down, we have, as I said, down 3 days in a row. We're not really we were only 50, 60 points down on the week on the FTSE. So it's a bit of confusion as to which way to go. I think, as I said, I think the clues will well be this afternoon after the non-farm payroll, as much as the figure itself.
Yeah, and also yesterday we saw trouble rumbling between North Korea and the US coming out a little bit, sort of risks of possible nuclear war, depending how the media blow it up. Do you think it's anything the markets need to worry about or pay particular attention to, or is it just sort of hype around?
It's a hard one to call, isn't it? Because the common sense in everybody would tell you that obviously it's a storm in a teacup, but you just don't know. I mean, I think there's a whole different side of the sort of political side of it that I think is quite hard to call. I can see. Let's hope we're around next week to be still talking about it.
Exactly. Yeah. Thanks, Nick. Thanks very much.
Okay. Thanks, Anne.